Welcome everybody to the Crowdcreate Trading Mastermind. Everybody's talking about crypto NFTs, and now people can hear about it from thought leaders like you, rather than trusting random Twitter accounts across the internet. So really the goal of these events are to support one another in what we call the wisdom of crowds. And Crowdcreate runs a network of well-respected thought leaders like yourselves, and you've all been specially chosen because of your thought leadership. For any of the guests that are attending, these topics were actually crowdsourced prior to this event. And so we asked the speakers, different topics that they would like to discuss that are both, relative to what's going on now, and also some good evergreen content that will live on forever and just timeless advice. So we encourage everybody to use the Zoom chat, Twitter. Please add everyone's LinkedIn, social media, and let's go ahead and get started.
Thanks, Jeff. So just introduce ourselves. So my name is Ivan, and Jeff we're both the co-founders of Crowdcreate. And I want to thank the team at Funds for sponsoring this event and putting this awesome group of thought leaders together. So looks like Lori, you got some fans here from followers from eToro. That's awesome. So the speakers here up on the stage, they're well-respected thought leaders, speakers from the crypto trading world. So we're going to have a few questions we're going to run through, and speakers, chime in, feel free to jump in. I'll kind of move the conversation along and call on everyone, but, just raise your hand, or you can just chime in when you feel like you want to say something. So let's jump right in. First topic for today. This is something we talked about during our pre-calls as a group. And this is becoming more and more relevant, especially with the SEC regs coming down. But the first topic I want to dive into is, what's the difference between trading and investing? This is like a very classic topic to open it up. Who'd like to kick this one off?
Well, there's no sense in wasting any time. I might as well kick it off. So my name's Lori Souza, and I'm a popular investor on eToro. And if you take a look at my results right now, they don't look so good, because that would be short-term thinking if you looked at the cover of something, right? But long-term thinking is investing. And so I've invested in a portfolio, and a lot of crypto traders have been down because the market went down, or they bought when it was high right now. But long-term investing, you're looking at doing something that your future self will thank you for now. Okay. And when you get started, you don't start out as an investor. You start as, let me just see what it's going to be like, right? Especially with crypto. You want to dip your toe in a little bit and see what happens, but, and see how much gains you can make. This is my philosophy anyway, coming from an economic standpoint. So anyway, long-term investing, short-term, let's see how much money we can make today is trading. So that's my input. I'm a long-term investor.
Yeah, I would say, the difference between trading and investing to me is that they're actually both integral and important in your portfolio, I believe. Long-term, as Lori said, investing is something that you're looking 5-10 year horizon. In crypto, maybe that's 2 months. I don't know. We know how this game goes, but I think you should have a mixture of both. You should have maybe 10% of your portfolio actively trading, because if you have a great trading strategy, that can definitely outperform your long-term hodls. But again, that's the key. They're really maybe 96% of traders are losers. So you have to really have a great strategy that you've back tested, that you've worked with, and you feel confident with. You can really make a lot of money and really increase your portfolio value by instituting that trading strategy in addition to investing.
Jerry, I think you pretty much nailed it with that 90-10 split, maybe 80-20 once you develop a real strong edge. But with traders, there's a big difference between trading and investing. And investing really needs to be a dollar cost average approach during bear markets. And then trading would be, taking profits during some bull markets. A lot of people think that we're going to 20x, 50x, ADA to $10 or Bitcoin to 10,000. It's really not one or the other. But at the same time, you got to just have what's your approach? Are you going to look at things from a short mindset and say 15-minute bars are making you FUD and fear out of the market? Or are you going to understand that Bitcoin on year over year, up 100, 200% over a 10 years period, which is going to outperform 90% of investments? Just look at a lot of the alt BTC pairs that are out there. Holding Bitcoin, holding Ethereum will outperform. And that's why like a 90-10 split would be very fair, like Jerry was saying.
Yeah,
I think the difference. Go ahead.
just to jump in here, I would highly, like most people, again, I'll just mirror the comments. Most people are shit at trading. Most people start investing and then they end up trading their entire stack, like 100% of their entire portfolio. That's the biggest mistake you can make. Again, don't trade all of it. I would even go as low as saying like just trade 3 to 5%. Depends how big your stack is, obviously. As you get very large, eventually you don't even need to trade much. Sometimes it's just for the feel. And yeah, invest in things that you believe in, where you see a market gap, and just stick to it. 5 years. Don't do anything. Don't touch it. Ideally, if there's some sort of like smart contract where you can lock your funds, like actually lock them so you can't touch them, that's probably would be a blessing for most people.
Yeah, I think the path is almost the opposite, which is funny because I think most people who come into crypto start as traders, and then they move their stop loss when they get emotional. Then they become investors. Then they become passionate community members wearing an ADA t-shirt or something similar, right? But I think if we're talking about the difference between trading and investing, it's pretty clear. One of them is something everybody should do, and one of them is something that basically nobody should do. Right. I mean, I believe in a 70, 15, 15 split if you must trade. And listen, I'm a professional trader. It's something I did full time for years. And I still, unless the market was absolutely ripping, wouldn't risk more than 15% of my portfolio trading and 1% of my trading portfolio on an individual trade. So you're talking about a fraction, even as a professional trader, knowing that I was more likely to outperform with my investments than my trades. I mean, people are going to trade away all of their money before they have a chance to be investors in the crypto space, because they see people getting rich overnight. And that's just not what it's about. I love to sort of joke that my parents' friends, the boomers, people who have acquired generational wealth over the last 30, 40, 100 years, 99% of them have never looked at a chart or thought about technical analysis and wouldn't even know how to place a trade. All they've ever literally done is take the extra money they have that they don't need to touch for a while, put it into any market, and let inflation do the rest of the work. It's just a matter of patience and time in the market, not timing the market, so to speak. You just have to put your money in and wait a long time and not be impatient.
Yeah, I'm with Scott there. To me, I think it's more 80, 20, 70, 30. And then also, I think most people join the market doing like altcoin trading and then kind of turn into investors. But just the cut and dry difference to me is, again, investments, you're looking at more of a long-term hodl. You're like, this doesn't need to happen overnight, I'm good to go. Whereas trading, you have actual time frames or periods you look at to go in and out of different projects. So like maybe it's a 2-week trade, a 3-day trade, a 3-hour trade, a 10-minute trade, whatever. But you're actually looking to go into a project and leave that you're literally looking for profit. You might not even believe in the project. You just see the indicators that it's about to pump. You can get some, you can scrape some profit off it. Whereas investing, you're like, hey, I'm not worried about what's happening in the short term. This is a good team, good project, long term. I know this thing will work out. So I'm kind of saying, but I also agree with Jerry. With that 10 or 20% that you do actually trade, if you do know what you're doing, you can, definitely account for a large percentage of your portfolio with those type of trades.
We're going to get into some of those topics when we get into the risk and how do you manage those risks later. But I do want to move along, and we all talked about where you can trade, where you can invest. Another hotly asked this topic is, what are the pros and cons and the differences between, centralized exchanges and decentralized exchanges, especially what's happening to like BlockFi and, all of these Kraken making their recent announcements. What are your thoughts?
Well, I'll just go from a structural approach. Like the differences from centralized exchanges to, DEXs is, first of all, you have market makers that are sitting on exchanges. They populate the order book most of the time. That's who you're trading against. Of course, you're trading against people also. On DEXs, specifically, you trade against liquidity pools, which is just a pool of liquidity, and that's always sitting there. So actually, it's very interesting from like an infrastructure point of view, because during market crashes on centralized exchanges, let's take the worst case example right now, even on BTC 2020 March crash, I mean, if you were trading it, there was just, the order books were just, they were gone. There was like barely anything on there. Versus like on DEXs, of course it crashes, but there's always a pool of liquidity you can trade against. So that's like one of the first structural differences. And I'll leave some for others also. Also,
Well,
you probably want to talk about conditional order types, which are on CEXs and not so much on DEXs.
man, I know you're in the game. That's what's up. But I'll just add really quick that centralized, yeah, they usually are easier for the new beginners, easier setup, blah, blah, blah. However, for, you know, crypto enthusiasts who really been in space, we do value our privacy. Even as regular American citizens, we value our privacy. So if you're looking for something more private and where you can have more control over it, I would say go to the DEX, right? But if you are looking, hey, I'm cool with the safe route, I'm cool with them rug pulling me or stealing all my money or whatever, then go to a centralized exchange, pay taxes and do all that good stuff that we were used to doing.
Hey, there's a bunch of geniuses that put ENS on their DEX wallets, right? And trade.
Well, I'd just like to say or explain the difference as an educator. I have to do this. So the decentralized exchange and the centralized exchange are running in parallel right now. Those are two financial systems that we have. So the whole idea that Bitcoin came about was to create a decentralized financial system, an alternative to the centralized system. And so what we're standing for in Bitcoin is that it's community money, it's on the ground money. And I posted something the other day saying, you know, just like taxi cab companies don't like Uber and hotels don't like Airbnbs, banks don't like Bitcoin. And that's because it's decentralized. It's community money, on the ground money, where we could actually create a transaction, send and receive money to whoever we want, wherever we want, whenever we want. There's no limitations to a Federal Reserve wire or ID that only operates certain hours during the day in certain areas of the world. So that's my take on the decentralized.
One quick thing with centralized versus the DEX. The DEX is you can really trade some crazy altcoins and meme coins and a lot of illiquid things. So you got to have lower position sizes, but it provides you a ton more flexibility versus the centralized exchanges. And I think Valentino said it proper when you talked about exchanges like FTX, where you can really set nice raise stops, stop limits, profit targets, things like that are far easier on the centralized side. So those are just the two main differences from my point of view and history of using them.
Mark said it best. Illiquid DEXs are typically less liquid, you know, have less liquidity than your centralized exchanges. So, you know, that's something to keep in mind as a trader. We're talking about trading here. You know, you probably would want to trade on a centralized exchange if you're doing some serious, you know, lot sizes, if you want to say.
I do think that there's going to be a lot of this. Go ahead. Sorry, you haven't spoken. Feel free.
So, some centralized exchanges have some protections for customers, like Bittrex has insurance, Kraken has some insurance, even some non-US entities like Nexo, they're insured. And so there's some benefit to looking at centralized exchanges, even though, I mean, personally, I don't like them. I'm very much privacy oriented, but I do like having the money I'm risking over there under protection of some sort, where I don't have that on a decentralized exchange.
Yeah, I was just going to say that I think that a lot of the differences are going to become somewhat moot over the coming months and years. There's a lot of DEXs that are adding all of the functionality that the centralized exchanges have, like DYDX, of course, Bullish. A lot of them are launching with full, robust order books and trailing stops, stop losses, all of those things. So I think that we're just seeing sort of the evolution of the DEX to catch up at the moment. So a lot of what was the case 6 months ago or 2 years ago or 3 years ago is not going to be the case a year from now. I have a feeling that the DEXs are going to catch up very quickly in functionality and liquidity.
They're going to be virtually the same. You're going to see it. And what you're seeing a lot is also the centralized exchanges are all doing their own smart chains, if you will, right? I mean, you see it with Binance, you see it with, FTX is essentially Solana, right? Then you see it with KuCoin. They're doing their KuCoin community share stuff now. And that's also in order for them, they're foreshadowing possible crackdowns in the future of regulators and kind of governments, and for them to be able to flexibly move into these environments later on, you know, because it could still we don't know. We never know. You never know what crazy person is governing a certain area and what they're going to do. So that's what you're going to see as well. And just to put on to that, also add on, centralized exchanges are centralized parties. They adhere to KYC, AML. They have standards to set, right? DEXs, anybody can participate as long as you have a wallet. Of course, you got to get some stables into it first, but anybody can participate and it's completely free. And what you're seeing also is a trend of like KYC parties coming in, KYCing wallets in order to participate in certain services due to whichever jurisdiction they're, based and what clients they can service.
I want to hone in on this in this topic here because it is actually a commonly asked question when it comes to centralized exchanges, and especially where they're located. Let's say if you're in the United States, and then now you have the SEC regulations, and that's making a lot of headlines right now, and it could equal reduced features. It could be reduced access to tokens. I kind of want to stay on this topic for a little bit and hear what the people here think about that.
It already does. I was gonna say it already does. Like Americans can't do anything.
Yeah.
Right. I mean, and it's already
futures
being reduced. So I don't really think it's a matter of what happens with future regulation. I think obviously the Ripple case is, a lot of people have their eyes on that because if Ripple loses, of course, they could blanket deem a lot of coins and project securities. But I think at this point, the United States is just looking for a way to collect their taxes as always, and to come up with a reasonable approach to allow innovation to happen onshore. So I think beyond having a few pairs that come and go, I think that the United States will always have extremely limited access. I would say arguably this is outside of somewhere where it's outright banned is probably the most difficult place from a trading and tax perspective to operate for an individual and also for a company. So honestly, I don't see regulation making that worse. I'm hopeful that it could actually be somewhat improved if we get some clarity and clear rails to operate within.
Yeah, and not only that, the centralized ones, I mean, they already been acting crazy. I heard somebody mention Bittrex earlier. I've been off that for years throughout a few issues, but one of the most telling ones was literally overnight. They changed their terms of service from you can withdraw 2 Bitcoin in per 24 hours. And then the Bitcoin, the price soars. It's like, well, you can do 0.2 every 24 hours. It's like, all right, like literally we watch
the liquidity of Bitcoin there.
Right. Well, of course, exactly. So that's my point. It's like, they're going to be running the same game as the banks are already doing. They're trying to do it now, and I think the U.S. government really only influence that in the short term. I think Lori mentioned it'll be a place for both of them. And then as technology increases, as DEX become more powerful, have more powerful tools, I think it'll be almost like downloading. I always compare it to downloading music and movies right now. You can pay for Netflix, Spotify, and do all those things. But there's also people on the internet every day just watching and listening to all this stuff for free. So I think we'll see the same thing for them. Eventually it'll be, this stuff is too complicated. I don't want to be on a DEX. I want to be on a centralized exchange. Maybe your grandmother and your parents will say it. And then you have people who are tech savvy who'll be like, no, I know how to use the DEX. I'm good to go on this side. So I think it'll kind of morph into that.
If I can jump on here, just so you guys know my background, I founded the first centralized exchange in the Netherlands that got the licensing from the Dutch central bank. And the Binance move was so predictable. I was calling it a couple months before. And that has to do because they started touching fiat money. They started opening fiat rails, which means you're adhering to anti-money laundering policies, right? That are like ingrained over decades. And you cannot just start moving money without knowing the customer of, like, say, 2 BTC. It was like 30,000 plus, right? Or 50,000, whatever it was at the time. So that's why actually KuCoin, if you look at it, it's been kind of flying under the radar because they didn't have this fiat SEPA, whatever integration straight away. But Binance, because they did it and they started touching money rails, they of course had to adhere to policies that are there for decades, and they can't just avoid them. So actually, that was a very predictable thing that was happening. Just to point on to that, it wasn't something that was like out of the blue.
That's a good point. Yeah, actually, I want to hear from Tiho. I think you were about to answer a question.
I myself am in general not a big fan of regulations. Well, I remember the evolution when we kind of first playing with fork delta into this much more functional version of a decentralized exchange. And one of the things I think that's interesting about the technology is it has the ability to front run regulation and get us to somewhere that's more functional for more people in general. This idea that people can participate in the financial economy that's inclusive regardless of their identity has been one of the big key selling points. So regulation is almost the opposition in which I think this ecosystem is largely fighting, is how do you maintain control of sovereign identity of yourself through multiple borders, channels, and your assets, importantly as well. I mean, a lot of this comes from how many cultures and countries have had revolutions where they start aiming their weapons at a particular group of people, and where do you leave your assets? So it's part of the mobility idea of your identity and your asset is extraordinarily valuable. So I'm a big fan of the decentralized exchange, and almost in total opposition to regulation, especially in this area. So I think what Scott said is right. The United States is going to be as relaxed as possible and hopes to catch as much of the boom wave that's here, because we haven't touched the surface yet. The play to earn sector. I mean, again, this is where you get into a question. It's like, okay, well, what happens if someone creates a video game character, starts playing a video game, and earns hundreds of thousands of dollars of an NFT character, and based off of the gravity of the brand, et cetera. So I think we're going to have governments stumbling head over heels to try to keep up with what the play to earn sector is doing now as well. So largely, I try to stay interested in where the regulation is a few steps behind, because it's the most active and the most volatile for like where I would want to make my investments to begin with. So personally, I love centralized exchanges. I think what FTX has done is amazing for the ecosystem. It does provide a smoother on-ramp. I'm a big fan of pretty much everything Sam has been doing in the ecosystem. I think is really in touch and aligned with where this place started from. And then again, if you've never participated with a decentralized exchange, you're kind of missing out on the value proposition of this whole sector, which is understanding how technology can replace the old law system and the old governance system and the old money system. And we're still discovering what that is now. So I try to stay away from regulatory captured areas. I live in a foreign place so that I can participate in these abstract ways a little more functionally as well. So I often feel sorry for the United States citizens who couldn't participate in Avalanche. Like, there was glaringly awesome technology coming, and you guys were held back by regulation. And I don't think that's to the benefit of anyone. You know, we talked about this before. It's like, do you let the participant get burned to really understand what they're doing? And how do you provide a proper education and on-ramp with the financial tools instead of regulating first and foremost, so they have like a valuable skill set to show up, participate without getting burned, because that's almost an inevitable part of the learning process.
It is. But we saw the same with like DYDX. I mean, like a lot of, you know, USA investors didn't have access to that. But yeah, Jerry, I definitely want to go to you, but let's go to Mark really fast. He had his hand up. And also I want to transition that into like talking about the risks, because DEX is, you know, there's a lot of good out of that, but there's also risks involved. So Mark, I'd love to hear from you.
I was just going to marry off of what King said about, you know, if you want to see Netflix for free, there's a lot of different on-ramps for that. And same thing for crypto. There's still on-ramps if you want to use a centralized exchange for lower dollar amounts. I mean, FTX, I know people that are doing $2,000 a day there. I think Binance still has 2 Bitcoin per day withdrawals, and there's things like that. But with the DEX, the one thing you got to worry about is you don't have really customer support there. You better do your homework, and there's a lot more scams going on there. So those are the kind of the differences between centralized and decentralized in regards to the risk that you're taking. You got to do your homework, and it's not easy. So you got to put the time in to get the results if you're going to look to utilize those platforms.
Jerry, I want to hear from you.
Oh, I was just going to comment what Tiho said about the United States and them protecting investors from bad investments. But hey, they'll let you play that lottery, right? So it's they're really it's a mess here in the United States. I got to get out of here, Tiho.
Well,
the problem is if you get out of here, they're not gonna let you.
It's gonna cost me $200,000.
It's not,
right.
It's not like you get out of paying taxes because you leave the United States, and if you have over $2 million, you'll be paying them for the next 10 years extra.
Right.
So you effectively can't escape the United States if you're a United States citizen, unfortunately, and they're gonna get you on the taxes. And just to Tio's point, really quick, I want to say I'm not saying I'm a fan of regulation. I'm just a realist. It's coming. Yes. If you live here, you're going to operate under the auspices of the United States government. So better to prepare for the reality of what's coming. It's great to talk about trading on a DEX and identity and all these things, but you still got to report your wallet and pay your taxes. So I don't really see what the difference is if you live in the United States. Every single one of my wallets, every single asset I own, no matter where I'm trading it, how anonymous it is, I literally send the transactions to the IRS. So
Yeah,
I'm basically shit out of luck.
I wasn't
regardless.
burdened as a United States citizen.
I want to piggyback on TL2 and with Scott. So I agree with Scott. Throughout the years, I have turned more into a realist because when I first started, read white paper, this makes sense. This works. Why wouldn't I adopt it? And then you start seeing dirty regulators, dirty politicians, dirty corrupt everything, how the market's being manipulated in some aspects. So I did become more of a realist. Like, okay, regulation is coming in sense. To be clear, I'm against regulation. I'm for self-regulation. We just saw, I think, the Wonderland project or something. The guy, it was the same guy who came out of Canada with Quadriga CEX. That project got shut down overnight once everybody found out. So I'm a huge fan of self-regulation. I will have to say I disagree with Scott really quick when you talk about giving all the wallets and everything. Like, no, I think this is a game of whack-a-mole. They can try to capture everybody. Granted, if you're trading over a certain amount, if you're doing that much movement, then maybe, but also like there's no, right now I'm just not seeing how they could. Like, it would take too much money to track down one person.
I have a million followers, my face and my name on my Twitter account. I'm not playing games with the IRS.
Right, listen, hey,
you don't have a choice.
I gave the IRS to hide that one like avalanche trade I wasn't supposed to make. Y'all can have it sorted out later.
But when it comes to regulation in this space, and I think that the problem is, and the reason why people reach for regulation so much, there is a high number of people who are mitigating from other professions, who are transferring from other professions, trying to mitigate their risk. And if you've been in this space long enough, I'm sure everybody on this panel knows you're going to catch an L. Like, something's going to happen. Lori even mentioned, hey, my trading account might not be what it usually is in the short term right now because of the market, the long term, look at it. So everyone who's been in this space has been through it. So when we talk about regulations, the United States government is like HR at a big company. HR is not there for you. They're there for the company. The US is the same way. They're not here to protect investors. If that were the case, the entire way we do banking and the banking structure and the Federal Reserve would be totally different, but it's not, because they're not here to protect. They're here the United States is a business. They're here to make money. Through any means necessary. So
I guess I'm being a bit of an altruist, but I think that better technology will replace the old stagnant ways. Just, it takes time. It's a grind. I feel
I think the technology will. I think the technology will, but I think we're kidding ourselves. We think regulations will be the one to do it. Regulations will be super helpful. Again, I really think regulations are becoming a thing because, again, they're people with money, resources, capital, and phone numbers to regulators and politicians to say, hey, what are the best ways I can mitigate my risk in here? It's not mitigating the risk for the entire retail market. It's mitigating the risk for people who come with money. So I'm really against regulation. I think self-regulation. I think really we should just be letting the environment, the industry innovate until we see what this is right now.
See a lot of hands up. Let's go around. Let's go to Lori and then Valentino and Jerry.
So how do I take the hand down there? So anyway, there we go. I think the main argument right now that we're looking at when we're in a DeFi system and a centralized system, and cryptocurrency was created to be the DeFi system, is that are we going to conform to the centralized system in a DeFi world? That's not why DeFi was created. It's a peer-to-peer payment system. Now, when you think of crisis investing, and right now in our economy, we are in an inflationary economy. And so people are looking for alternatives, and that's to protect themselves and to look at what's the future going to hold when gas is $10 a gallon, or bread is $10 for a loaf of bread, or $10 for a gallon of milk. How are people going to even live? So when you look at Bitcoin as an alternative in a DeFi system, or gold or silver, of course, gold and silver aren't moving as high as Bitcoin is predicted to go, which also can help people have a hedge against inflation and to prepare and to avoid these hard times that are going to be coming upon everybody in this current fiat system we're in. So if we're looking at conforming in cryptocurrency, in the world of cryptocurrency, conforming to a centralized system, that's not why it was even created. It was created to let's get everybody so they can become sovereign individuals and make their payments to who they want, when they want, and to invest in what they want. And also, as far as when you put money in the bank right now, listen, if you put money in the bank, you get a $15 charge in your bank account in the centralized system, right? A month. So if you have a business or a personal account or savings account, that's how much you're getting taken out. Now, let's say you put $100 in the bank and tomorrow it's $85 because they took the fee out. If you put $100 in Bitcoin, you know what? Tomorrow it's going to be $150. And so if people can understand the economics of this, then they will see that this decentralized system is really worth their while when it comes to crisis investing. And that's what we're looking at in this DeFi world. So I just wanted to say that because I think it's so important to remember why it was created in the first place. Worldwide, in countries that don't have such a superior regulatory body like the United States, are adopting this and knowing the value of being able to send a payment anytime you want to anybody. So it's pretty important. So buy Bitcoin. It's a commodity.
I love the philosophical optimism. Coming from the harsh reality from, I can't speak for the US, I know it's highly regulated. I don't even think it's an argument or like a conversation saying, are we getting regulated? It's already here. In Europe, we're already regulated. Like the second the regulation happens when crypto is exchanged for fiat, there's no way. If you want to onboard and you want to buy stuff, you need to get KYC unless you're getting it like from somebody peer-to-peer, right? If you're maybe living in Dubai, you can do whatever the hell you want, but most people don't live in Dubai. If you're living in like, let's say in the Netherlands, they have regulation. There's no way you're going to be able to off-ramp your crypto unless you go and KYC. They're going to ask you, where did you purchase it? When did you purchase it? Like in order for you to, for example, switch it to euros and to do something with that money, if you want to buy a property, you're not going to be able to do it otherwise. So that's the bottom line, and the regulation is already here. That's all I wanted to say to that topipic.
Let's go to Jerry and we'll switch out to
I gotta agree with Scott and Valentino. I'm a realist. I've been in the space since 2013. Okay. The arrow of time, as far as which direction we're going, from being decentralized and not having any regulation to having regulation. Unfortunately, guys, we're going toward regulation. I mean, it's like the guy said, it's in front of us. We see it. It's self-evident. So we have to just learn to accept that. I mean, back when I got into it, there were no Coinbases, there were no central exchanges. You had to buy your Bitcoin on local Bitcoins or go through BitInstant. So it is what it is, ladies and gentlemen. You got to just deal with it. Can we turn a tide? Can we go the other way? Possibly, but that boat is pretty big, and it's going to take a lot of momentum to turn that ship around, unfortunately.
So I agree with you too, Jerry, as far as everything you said. But one thing I do want to point out is why like regulation is what we're forgetting about. It is literally a group of humans, like a small group, telling the majority what's going to happen. We haven't voted on nothing. We don't vote on anything. It gets dictated. That group of humans are getting, initially, not as much anymore. We're starting to actually see a shift as more politicians actually are in crypto, or their kids are in crypto and Bitcoin. You're starting to see them. You saw somebody in Texas say, hey, Bitcoin energy is good for the, it's good. Renewable energy is good for the environment, for the grid. Like, we're starting to see them switch sides. Of course, Loomis in Wyoming. But at the end of the day, the reason why they're moving the way they move, when they're anti-Bitcoin and crypto 100% across the board, is because there were bankers off Wall Street, the Federal Reserve, calling the United States politicians and regulators, hey, what the fuck are you all doing about this? We've been paying you money to run. We paid for your campaigns, and now this is going crazy.
Hey, King,
I make that point. My fault, I forgot. It's probably PG.
No. Yeah, it's fine. Yeah, I was going to say, hey, King, it's 2 words, dollar hegemony. That's what it's all about. They're trying to protect the dollar hegemony, the dollar power as being world reserve currency, right? So you're going to see these regulations, I think, get tighter and tighter until people have to go to other countries.
So I do agree with you. I mean, honestly, and I can even make this case. I did PR for military as a naval officer. At the end of the day, 2 words, national security. I get everybody on board by saying this is a national security issue. We let Bitcoin take off and the dollar crashes. But my point is that there are humans doing this. So when we talk about this stuff as far as regulation, what we can do and all this other stuff, well, yeah, if you're giving them every wallet and you all say something, this is how we're going to play, then okay, then it's going to be what it is. But if we start pooling our resources together, as we already seen, and start going back and electing people and having people in Congress and lobbying and saying, no, this isn't what we want. This is not okay. We don't want you on our business. Then eventually the more people could actually switch that around. But again, that's not what I'm saying here. And that's because there's professionals coming from other professions and they're trying to mitigate risk. That's really it. That is what I've been saying, because everyone who starting from here or isn't coming from the profession for the most part, they're like, no, let's push the gas. Like, no, we're gonna like, this is what it is. Bitcoin is made to be peer-to-peer, but all of a sudden they're saying, well, you do a peer-to-peer transaction, you're essentially a bank. Since when? That's not what the technology is created. We see what that law is trying to do, what the rules are trying to do. And it's two things we can do. We can say, fine, that's just what it is. We can't beat it. That's the old guard. Or we can say, no, we disagree. And I'm going to start funding this politician. I'm going to start, perfect example, we're working with Mayor Suarez with Miami Coin. Super centralized, of course, but still a base hit to get people over to cryptocurrency, whatever. It's like, are you going to still in the sideline and play the rules as given to you, or are you going to try to push back? To me, I think we should all be pushing back because we're the people that are actually in this space with businesses doing everything else with followers and all this other stuff, not the people who are being told by bankers, we don't like this new community and industry. What can you do to stop it or slow it down? I.e., let's just subpoena Ripple and go after them, even though we still don't have a case as of yet. How is that not illegal in and of itself?
King, that was well said. And I can see in the comments, a lot of people agree with you. That's awesome. But I also want to bring up the point that, technology is also on that ever-changing arrow. It's always advancing, it's always improving. And then now we're even seeing the kind of the shift where influencers, educators are even getting more and more ability to, and people are looking for, tips from these influencers. And I also want to actually just bring it over to Valentino and kind of highlight what is the role of social media influencers and how are traders getting educated in, and why like technology is spearheading this in a unique way.
Oh God, there's big problems on that side. I mean, I've been in the space for a decade now, and it's just like recent years where the emergence came of like, public figures. Of course, I think it's good to educate, and you should, but you should stick to certain principles and to certain ethics and philosophy. And unfortunately, we've seen like massive deviation of that because it's easy to make money, right? Especially with certain lucrative offers, and then you know how it goes. So it's very important to educate people, but people should withhold some sort of ethical standard. And unfortunately, when there's a lot of money involved and human emotions such as greed, people deviate very much so from that standard. And so props to whoever has an ethical, standard and keeps that up when they educate the public.
I see an opportunity here is just in the world of, let's say, copy trading. So that's something, spearheaded by eToro. And like, Valentino, can you talk a little bit about how copy trading works? And I know Lori's over here. I'd love to hear from you too.
Yeah, so actually on centralized exchange models, it's slightly different, right? So essentially there's some flaws with eToro. You kind of front run your users. You take a trade and then they get piled on. Second of all, they run their own order books, right? So they have their own market makers, their own kind of like fees on top. You're not really sure actually when you're getting filled, or if you ever traded on there, sometimes you get like margin called, even though, if, for example, you play with leverage, even though you shouldn't be. So the P&Ls are off. So what we actually built is a totally transparent system. It's obviously on chain. Everybody can see what you're doing. So it's also kind of, flaming people that suck at trading if they say they're really good. If they do it publicly, well, now it's for everybody to see. So what we built is a system where there's order books, which are the DEXs, right? You trade on the DEXs, you have the AMMs, and you have the liquidity pools. So you're trading against that liquidity. It's totally transparent. When you take a position, everybody gets filled at the same time. So you're not front running anyone. Yeah, so that's kind of that's how we take advantage of blockchain tech and improve that entire experience and make it way more transparent, open, and better, if you will.
Love to hear from anybody else and kind of the role of these social media people, or even these traders are just becoming more involved with, like, for example, copy trading is a perfect example where if you follow an influencer, you follow Lori on eToro, you literally can see what she's doing. And she's creating a personality around that.
Yeah, so I'm on the social trading platform of eToro. So if anybody's not following me, I invite you to follow me on there. Right now, maybe you want to wait, and I have informed people, wait till the market starts going up, which it is. And so there are lots of opportunities. If you don't know what you're doing and you don't know what the certain cryptos are, what their use case is, then the popular investors take the lead in that. And we also take the hits too. But, as far as being able to let you know where we're going with crypto, what's a good one to get out of, when to get out of it, and when's a good time to buy it, when's a good time to hold it. And so that's what social trading platform does, is that you can click copy trader. So you're not worrying about what's going to happen with your trade every day. Now, I'm not a day trader, and some people on the eToro platform are expecting me to be a lot more active in trading than I am, but I do a lot of buys. And then when I'm getting ready to sell a trade, I tell anybody who's following me, hey, I'm getting ready to sell this. So if you're copying my trade, you're going to get the profit from that trade. So, and same thing, if there's a loss, I pretty much hold on to my trades, keep them open until I can see a gain and then close them out. But then anybody who's copying will get to benefit from that. So it's really a cool platform, and there's a lot of information when you're on a social trading platform where people can actually input, and learn a lot in crypto by doing that. If you want to get started.
Just going back to regulation here in the United States, I'm wondering what's going to happen with these social media influencers. I don't do too much like buy this coin or buy that coin. I really pretty much just cover crypto news from a macro standpoint. But I know like back in 2006, when I took my swing at doing a commodity trading advisory firm, I had to go through all this CFTC stuff, FINRA, all these things I couldn't say, could say. And I see all these dudes on YouTube and Twitter. I mean, they're just violating stuff left and right. I just don't know. I'm wondering I really am wondering when we're going to see those guys start coming at us. That's what I have a question
They're
about.
watching
I don't
them
know.
right now.
Okay.
I promise you they're watching right now. There's some, one of the reasons I got into this, because my background is in ag commodities and foreign currencies. And then I got into the teaching side by accident. But, and then I just started my own thing. But one of the things that really irked me, and I wasn't even aware of it, and there's not a lot of professionals in the industry that really are, is how many scammers are out there, just like they're wolves in sheep clothing, targeting people online. They're like, yo, bro, get this, blah, 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 blah. And it's just the most ridiculous thing ever. And people are wasting their money, basically gambling. There's no transparency involved. And there are some followers there are some channels on YouTube, Twitter, all over, with millions of people who are shilling things where they're getting access to these coins ahead of time. They're not disclosing it. Right. And if you think the CFTC and the SEC are not following you or watching you, if you're one of those people, you have something coming, because they're going to watch you for years. They're going to track down every little thing that you did. And once they have a case the size of Santa's Christmas list, they are going to drop the hammer on you, and there'll be nothing you can do about it. So a warning to people who are out there doing wrong by potential customers or clients or even fans. You
gotta disclose,
especially if you're here in the States, they will come after you.
Yeah, gotta
disclose. Good example.
Perfect example. Bitcoin.
Well, also I was laughing at John because I think I know a couple of the people he's definitely talking about. But the answer, Jerry, I think the only reason why it hasn't happened yet, and when it will happen, is when the money's actually there. The money isn't there yet. There's probably, I think, on YouTube, of people actually making real, like, decent, consistent money. It's probably only like 5 to 7 that's really hawking it like that and keeping the coins and not telling their audience from. I think we probably pretty much know some of the same few ones. But I think it's going to be, it has to be like almost hundreds, if not thousands. I think when it's its own industry, where it's like, no, these are the traders, like people not even looking at Wall Street and the old school. Like, I think when it's its own industry, that's when they'll say, okay, now we got a market to take some money out of, all right, what are you YouTubers and Twitter and traders doing? I think it'll get to that point. Right now, I still think it's a lot of people that are acting like they're making a lot of money trading, or where they're not really. The promotion side of it, as you said, for those who aren't disclosing things, I think eventually that'll come back, but I think we're just too early right now still. And I hope it stops too, because unfortunately, we all know that's how a lot of people are getting subscribers and followers. Hey, this coin, blah, 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 pop, blah, 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 whatever's happening. And then we all know in the background, like, come on, man, they gave you 50K in their token. Like, that's not really what's going on. But I think it's still
negative feedback loop. You have the moth attracted to the bright, shiny light of technical and trading analysis. They start diving in, following people that have no idea what they're talking about, especially in a highly volatile market. I think one of the most underestimated aspects of the fact is this is basically all venture capital. We were buying Matic back at a $25 million market cap because we were able to recognize something valuable early. And one of the downsides is you're going to have almost an impossible time with any level of trading skill to outpace 200 to 300x gains over the course of 3 to 5 years if you get it right. And I think one of the unique prospects of all of this has been this kind of decentralized launchpad for companies and ideas. We'd seen versions of it in seed starter and more controlled versions, like I guess Kickstarter was one of these as well, where you could crowdfund ideas together. But ultimately, if you're participating in the growth of something, you want to have some type of stake in the game. And this has been a fascinating discovery. You know, the social media influencers, I think, sadly, will attract the people that are looking for that quick buck, who are looking at trading, which is, you know, we asked about what trading and investing, like going to the gym or trying to take steroids. If you go to the gym frequently and you just make investments frequently in good ideas that you think are going to be around for the next 10 years, you're going to do amazingly well. You know, most of the Forbes top 100 list is all private equity or early stage investors, followed by entrepreneurs. And there's only one trader on that whole list was Jim Simmons, and they created the Medallion and the Renaissance Fund doing high frequency trading. So, you know, in terms of who's moving the market, it seems to be that human psychology just keeps repeating itself, that you have this kind of initial negative feedback loop where people think that trading is a great way to make a routine profit. But you also have hidden right under the surface investing, which is an amazing way to generate wealth over the course of a decade if you do it right and you take a sound opinion. So sadly, most of the influencers that are popular because they're peddling the wrong thing. They're peddling the thing that's attractive, which is the exact opposite of what a good investment should be doing, which is, hey, basically, I'm going to make one investment. I'm going to keep doing that for the next 5 years, and I'm not going to sell it at all. In fact, I'm just going to keep trying to accumulate the assets I think that are undervalued. So it's kind of boring in comparison with, like, oh my God, we're going to buy here, we sell here, if this does this and it breaks out. It's really emotional. Whereas a good investment, like we were buying, again, Matic at a $25 million market cap. Had you just only bought for 2 or 3 years, you've done amazingly well. And I think we far often get too caught up in trying to make profit quickly, when if you're dealing with basically decentralized venture capital, you're going to have an impossible time to outtrade that. So yeah, pretty much the popularity of a YouTube channel is almost a negative side effect, because it shows there's a down. Now Twitter has a bit more of a logical conversation interest. Some of the really, like, you guys have great I've seen great conversations on Twitter, but YouTube more so, it pumps the algorithms for people that are like wide open faces, like, oh my God, something crazy is happening. It plays on the emotional downside of what the markets have taken advantage of for hundreds of years, which is people's emotional psychology.
But you know, Tiho, you make some good points there, and I just wonder, like, you know, how much longer will we see those Matic type investments where you can get in
forever.
And what I mean by that is the more people that enter a market, the smaller the alpha is, right? So I feel like over time, the more participants we have in the crypto space, it's going to become like stock picking. You have to really do your homework. You just can't go out there and just blindly put your capital somewhere and just 5 years later think that you're going to get a 10x or 100x return. You know,
yes.
People need to really.
Yeah, often the best bet is to play with who the winners already are, because then you have a time on deck. You know, Bitcoin's amazing for this because we have a decade of experience with it. Whereas if you're dealing something new with Matic, you're right. You're making a bet on the future. But this kind of outlandish play is also the fun part. You know, like the fact that we can go, people like the Bored Apes has been an astounding kind of social. A social experiment, and it's been profound to witness, because I didn't capture a lot of it at first. I'm not into video games at all, and I think this really changes the playing field. Like, where social media has done a really great thing is they're great at building community. Like Scott said, he's got like a million community members that support his interests, and they work together on collaborating on these ideas. This is a new way for people to collaborate together within these closed ecosystems. And even though a lot of the hype is what draws the negative attention. I think just anything that brings people to the sector, even if it's flashy and colorful, is a good way to get them here.
Yeah, I mean, I have 1 million followers, but I also have 50,000 people who think because I have 1 million followers that I'm a scammer, an influencer who's trying to peddle something, right? And so it goes both ways. I've been canceled before for merely talking about low caps on Twitter in the past and false cases. And I mean, to the point where I've had to travel with security and have to protect my children and things like that, just because I have a lot of followers on Twitter and have traded coins and talked about it, right? And so, yes, it goes back to the transparency aspect that you're saying, but what you learn, and people don't realize, as you get bigger, you just have to stop talking about everything and just become like a Bitcoin maxi and talk about shit that's large cap and in the top 5. And no matter what you're investing or what you're doing, you just can't talk about it, because if you tweet something and it goes down 6 months later, they'll tell you that you're the one who rug pulled it by pulling back your old tweet. So I think maybe YouTube is a little different. I have a YouTube channel, but I don't do the stupid faces, and my titles are fucking terrible. So it's like not really a thing for me. And I just talk about Bitcoin news, you know what I mean? But it's kind of a rock and a hard place, I think, as you grow, because there's no like map or book on how you're supposed to behave depending on how many followers you have or what you can and cannot talk about. And I think you just sort of learn it along the way. But like to what Tio's saying, I think it's important to realize that there will be 100x and 200x opportunities all the time, because blockchain will always people will always continue to innovate in blockchain. And 99% of the people there will think that what you're investing in early is complete bullshit and a scam and a joke until it's not. Right. And so like, if you were talking about NFTs 2 years ago or the metaverse 3 years ago, right, and you were in on those things until 6 months ago, people thought that was all a joke and it was all going to zero. Right. I was dismissive of Bored Apes. I think it's the biggest missed opportunity almost in my life, because I love that shit. Right.
Yeah,
and I did
amazing.
not buy one because they always seem too expensive. Right.
Yeah,
and so I think there's always, we're
one.
going to move into new spaces. Yeah, we did DeFi. Listen, we came into 2021 and all anyone was talking about was Bitcoin. Michael Saylor, MicroStrategy, Tesla, Bitcoin's going to be adopted by every country. It's going to be on every balance sheet. Guess what? By January 1st of 2022, nobody was talking about Bitcoin. They were talking about NFTs, metaverse, and DeFi. And that was in 1 year, right?
Yeah.
And so I'm not even going to pretend I can project what we'll be talking about in a year. I just know that I'm going to be talking about it and I'm going to be excited about it and invested in it. Followers be damned, right? And so to a certain degree, and then they'll say that you were ahead or you had some, but the fact is there's always going to be those 100 and 200x opportunities if you're willing to put your money where your mouth is early.
And
right. And most
patient,
people just aren't willing, and then they'll call you lucky. Right. You know, obviously. And so I think it's going to be very interesting moving forward, but I don't think we've even scratched the surface of the things that if we had this conversation in a year, we'd probably all be wrong about what's going to happen in 2022. And what
Not
the most exciting
Cryptodamus.
innovations will be.
Not Cryptodamus.
I'll be wrong. I'll be wrong. I'll be dead ass wrong. I'll tell you right now.
I'm really quick. I'm with Scott on that. I think we're just scratching the surface. I think maybe in about 15 years, it might be 10 or 15 years, we might slow down. But I think for the next 5 to 7 years, easy. It's just too much new stuff.
Come on, guys.
Shout out to NFTs too. I said NFTs will take the attention off of DeFi from the regulators, and God damn it, they did.
Thank you, NFT community.
Well, and it should be in any sector that you find interesting. You know, I have a friend that took a company that sells water and almonds and turned it into a $9 billion a year business. Like, if you think there's something interesting and it's early, and like Scott was saying, that moment where you're crazy, you're seeing kind of what might be the future of where we're headed, and you place your money where your mouth is and are patient for that. These 100 or 200x's have been tracked for over 100 years. There's a great book called 100 Baggers that tracks this data of where you could have made an investment and how long you would have had to wait. Here, what's lucky is it's so fast because you have a global decentralized finance taking place. This opportunity is so huge, and we're just scratching the surface. We're going to find new things that all of this can do every year, probably for the next 10 years. I would agree.
Incredible.
It's just like companies, right?
Yeah.
It's just like companies in the traditional markets. You also see constantly, you know, of course they're coming in on IPO and it's way higher, the market cap. But just if you take a 10 million market cap and it goes to $1 billion and made 100x, right? If you're going into Bitcoin and sitting at $1 trillion, well, you know, you need so much capital just to double it, and you're not going to be making those outsized gains. So if you're looking to create wealth, you look for the low market caps, right? Obviously, And like Tijo said, and everybody else, you just stick to them. You wait. If you have staking opportunities, stake that shit, because you'll be making even more, especially if they do 100x, your staking will probably pay for all of the initial investment by itself if you want to take some out. So if you want to generate wealth, you go for low caps and you stick with them. If you want to secure your capital, if you have, if you're sitting on 50 million or something, you don't need to really do so much anymore. You can be like sitting in BTC, ETH, right? You're cool. That's fine. You can risk like 1 or 2 million on like low cap stuff. You can spread it across 20 projects. You can do 100K bets in like really low cap stuff, and you're good. So it also depends on your capital size.
All right, so we're gonna wrap up. We got
real quick. Sorry. Sorry. There are 4 people on the planet who still hold Amazon stock from the IPO: Bezos, his ex-wife, and their parents. Literally it. Everybody else was a weak hand who got shook out at some point in the last 3 decades, right?
Well, you gotta sell, Scott, at some point to realize those profits, right?
I'm not saying they're wrong, but I'm saying if you don't think the opportunities are there, the biggest companies in the world were 1,000x, 2,000x, 3,000x opportunities to people who were early and had some vision, right? And everybody else, there was Amazon had a drawdown of 97% in like 2000, right?
Well, to be fair, nobody thought that a book company would turn into selling toilet paper and make movies.
Right. My point being, if anyone doesn't think that there's going to be 100x opportunities or 200 or 1,000 or 2,000 consistently until the end of time, they're wrong.
No, I love that. And that's a good closing thought. And like, the access to education, to these deals. And who would have thought that, a book company could do that? That's very hard to find. But I wanted to thank all the speakers for being a part of this event. That was an awesome discussion. I want to thank Funds for sponsoring this event, and also the attendees for joining. And I know we had a pretty vibrant chat in the Zoom chat alone, so it felt like we had like 2 masterminds going on at the same time. But I want to say thank you everyone for your time, and looks like we have a bunch of topics for the next one, like NFTs and regulation. We got a lot to talk about.
So I've been quiet, but I've been tweeting all of you, posting on our social media. You've all been great. Thank you for contributing all of your insights and knowledge. And we had a last question on like, who do you go to for education? And so we're going to be putting all of your social profiles out there. And hopefully this is one of many of these discussions. And we got to touch base in a year from today and see how things go.